Hi, I'm Floyd Black, president of Gold and Silver Inc., and I have been studying about having gold and silver in one's investment portfolio since the mid-1970s. My first investment into gold was in 1981. Today, after spending over 40 years in financial services, the only investments that I feel really comfortable recommending to my clients at this time are hard assets, such as gold and silver bars. Now let me ask you this question. Are you losing money by saving it? This illustration shows that if you had invested $100,000 into the NASDAQ at the beginning of the year 2000, plus another $100,000 into the S&P 500, and an additional $100,000 into the Dow, today, after 12 years, your $300,000 investment would be worth $262,000. So you lost $38,000 over 12 years on a $300,000 investment. Now we have a bigger problem, because every time the government prints a dollar, they water down the dollars that are already in existence. And this watering down effect is having the same effect to your current investment portfolio as we speak. This illustration shows that these 5 countries, by printing money, they have devalued their currency by 75 to 80% over these 12 years. So you not only lost $38,000 in the stock market, but by the government's printing money recklessly, you have lost an additional $197,000 on your $300,000 investment. So today, your $300,000 investment will only buy the equivalent of $65,000. Now this next illustration is a little more encouraging because it shows if you had invested $100,000 into silver and another $100,000 into gold at the beginning of the year 2000, those 2 investments today would be worth $1,224,000. However, when we apply the government's watering down effect from printing more money, today that $1,224,000 will only buy the equivalent of $300,000. So now you can see why I asked you the question when we started. Are you losing money by saving it? Since most governments don't have any savings to draw on, going forward, the printing of money is going to continue. And the only way you're going to be able to protect your portfolio is to put a percentage of it in hard assets, such as gold and silver bars, because hard assets appreciate in value as paper money loses value. This next illustration shows 23 separate currencies that have all become worthless because their politicians acted irresponsibly. Valari once said, "All paper money eventually reaches its true intrinsic value, 0. So let me summarize. The euro is pretty well doomed. Japan, their debt is 229% of its GDP. The US, their debt is 100% of their GDP. China is trying to step in and fill up that void. And I just read the other day that they want to buy 5,000 tons of gold when only 2,600 is mined each year. In addition to that, if the pension funds in the US decided that they want to put 5% of their portfolio into gold, you can see what that would do to the price. Gold cannot be printed, which is why gold is so valuable for you to hold in your investment portfolio. If you would like to know more about having gold and silver in your investment portfolio, call me now at 801-875-9343. That's 801-875-9343. Call me now.